Good day, everybody. It's a guy here, the unknown, and today I want us to look at something very important. I want us to look at some beautiful trades that happened yesterday. I believe most of you got them, okay, because these are the same things we talk about each and every day. And as I said, I no longer feel comfortable sharing such images with you because people copy these images and I find them in many other groups where people are trying to scam people, okay. But I'm only showing you this one because the pattern started before the session, which is important, okay, and we have already spoken about these things before. So guys, without any further ado, let's jump into it. I'll show my thought process with you. As you already know, this is the most explosive trading strategy for indices. We trade moves that are ready to explode, okay? We trade moves that are ready to explode. We don't want to play around, sit on the charts the whole day, waiting for something we don't even know. We are only coming to our screen when prices are ready to explode. So guys, we have a certain number of criteria because if you are trading and you don't know what you are looking for, then you are simply gambling, okay? So you have to sit on your hands and only execute when you have an opportunity, of which I believe and know that most of you are aware of. So listen here. The first criteria is to identify trade volume before the session. However, I did say that sometimes you won't be able to identify this, okay, because some days they can just trend, okay, or else the session can open in the middle. Remember, we are coming 5 to 10 minutes before the New York session opens, which is 9:30 a.m. US time or 3:30 p.m. South African time. Times will be changing soon, okay, because of the daylight saving thing. So once we have identified trade volume before the session, we do this 10 to 5 minutes before the New York session opens. Then we have to wait for the session to open, okay? And it's important you don't trade the first candle. Why? Because mostly that's when most of the orders are coming into the market. Remember, people place a lot of orders, and the New York opening session time is when the indices open, and that's when a large number of orders is coming to the market, and mostly it's going to be a stop hunt and the biggest candle, okay? So if we have news during the session, we have to wait for the news to trade, okay? That's important, okay? And once this criteria has been met, we cannot come to this one unless this one is met. The only criteria we can continue without is this one. Hence I'll put a green box on it, okay? That's the only criteria we can continue without. However, we do not continue until this one has been met. Nothing difficult here, you just wait. Then we want to see a chart pattern. Once the session is opened and there is no news, we want to see a chart pattern. Okay, we want to see a chart pattern. 90% of my executions are based on what? On triangles, you already know. However, those are not only the patterns we have different patterns, okay? Look at this. Once we have a chart pattern, we want to see an evidence candle. An evidence candle is the biggest candle that breaks out of the pattern. I always show you an example here of a triangle like this. Say for instance, if this is your pattern and prices do something like this, okay, prices do something like this, and this is the breakout candle. This must be the biggest candle from the last leg. And when I say the last leg, I simply mean the last touch down here, okay? You see, they touch, but the last touch to the breakout. And you will know this because this is gonna be the breakout, okay? This is gonna be the breakout. So you can't say, how am I gonna know this? You will have this information when they break out. So this candle here is supposed to be the biggest candle from all the candles that made this last leg. I'm not talking about from here, but from the last touch down, okay? The breakout candle must be the biggest candle, okay? Must be the biggest candle, okay? So that's the evidence candle. We call it evidence once it's the biggest candle that breaks out. But we are not just looking for any breakout candle as everybody says. We are looking for a breakout candle at the correct time. At the correct time. This is important. At the correct time. And when I say the correct time, I mean something like this. You see, this is something like a watch. We need executions that are as close as possible to the o'clock mark, or as close as possible to the half-past mark, as you can see here. So I'm only willing to take a trade if it starts from 50 to 10 past. Why? Because this is close to the o'clock mark. Or if it's from 20 past to 22, that is 10 minutes before the half-hour mark or 10 minutes after. I'm only willing to take something within here, okay? Within here. However, there are times which I call golden. If the evidence candle, which is the big candle that breaks out of the pattern, if this candle happens anywhere from 55 to 5 pass, that is a beautiful, beautiful, beautiful execution. And again, if it happens anywhere from 25 pass to 25 2, that is the best execution. These are what I call my golden times. Okay, golden times. These are my golden times from 55 to 5 pass. However, even if it happens from 50 to 10 pass or from 20 pass to 22, I'm still willing to take it. Why? Because most likely you're not gonna get multiple evidence candles at this time. So if it's given from here to here, I'm willing to take it. But I really love the ones that happen from 25 to 35. Okay, so again, the evidence candle must be at the right time. It's important. The evidence candle must be at the right time. I repeat, the right time. Okay, don't ignore this, it's important. Okay, so now again, look here, we execute. Okay, our minimum stops are 15, maximum 25. Okay, but most likely 25 is the safest. Okay, 25 is the safest because sometimes they might just retest and continue, give you another opportunity. Okay, and then the minimum target is 50. However, market conditions will tell you how much to target, and I will explain this in a moment. Okay, because this is also important. So I believe you understand everything outlined here. Okay, so now we are going to be going to the charts. Okay, as I always say, this is how I look at my charts. You can see US 30, S&P 500, the NAS. I look at them like this. You see how my screen is divided? That's exactly how I look at them. And one thing we'll be using again, of which I said if you send me an email, I will send it to you. Okay, sorry, I'll come to this. We have this is a tick box. I've put this tick box here to guide you. Okay, to guide you. We're gonna be using this tick box again. I'll send it to you. It has the criteria: trap volume before the session open, no news, pattern, evidence, and entry. Okay, so we're gonna be using this to guide us through the charts. Okay, so the first thing first is to do what? To identify what? Trap volume before the session, because it's also here. Okay, trap volume before the session, same thing I've been explaining here. Let's go and identify the trap volume before the session. Who is trapped? And when I speak about trap volume, I'm saying we are coming 10 to 5 minutes before the New York session opens. That's why here I have this gray highlights. It's an I session indicator. It's free. It's in my description if you are using MT4. Okay, so when I say trap volume, I'm talking about who is at a loss when prices are here just before the session opens. Okay, who is at a loss when we are coming to our screen? And as you can see, who is at a loss? Obviously, I told you this red dotted line is the closing price of the previous day. Okay, it's an indicator which is free. It's again in my description. It's free, or you can just search previous day closing price. You will find the indicator. Okay, it's free. So look, I told you most of the days they're gonna trap below or above it. Okay, below or above it. So when we look at yesterday, who is trapped? I'm gonna use this blue box to identify trap volume. Okay, these guys down here are trapped. Why? Because when we come to our session 10 to 5 minutes before, that's when we're gonna be identifying this. Okay, when we come here, these guys, everybody who sold, who went down, is at a minus. Obviously, if you sold here, prices went up, you are losing. So these guys here are at a minus. They are trapped. Okay, when the session begins. And then again, on US 30 we'll do the same. We are coming here. We are coming to a session here 10 to 5 minutes before the session opens, and let's look at who is trapped. Obviously, I told you again, everybody who sold is literally trapped. I want to show you something important regarding trapping volume. Okay, and I've done this in all my videos. So if you haven't subscribed, hit the subscription button so that you don't miss. You see guys, these guys are at a minus when we are coming here. Remember, we don't have prices here. Okay, we only have prices here. So this is the information you have. Why? Because who is losing? These guys are losing. Okay, these guys who went down are losing. So yes, yesterday we had trap volume down, and sometimes we won't be able to have this trap volume because they can go up again and session can open in the middle. So we will have people who went up who are losing and people who went down who are losing. Okay, and I know people ask silly question like how do you know people who went down are losing? Obviously there are people who are chasing prices. Remember, there are billions and billions of people who are actually active on the markets on a daily basis. Okay, and some people are just chasing prices go down, they execute. Okay, I believe you have been on the chart for a long time, and you have seen that you have been in the wrong direction multiple times, right? So you understand what I'm talking about. So yes, yesterday we had trap volume down, trap volume down, trap volume down. Okay, and the reason we identify trap volume, this is important, please pay close attention. Okay, don't mind the alerts. I use alerts to trade. Okay, when I have a pattern, I set my alerts down and I set my alerts above. Okay, so some of the alerts, yes, won't be triggered because the only alerts that will be triggered are the ones in the direction of the breakout. I use alerts and I've already explained that to you. Okay, so pay attention to this. The reason we identify trap volume before the session is we know that they use the entire day, the Asian and the London session, to trap these guys, right? So most of the time, if they're giving you an opportunity to the downside, you must be aware that if you are targeting 50, you have enough space for that 50. If you are targeting 100, you have enough space for that 100 pips. Because most of the days, they will lead you into trap volume. Already they've gathered orders here. So they will lead you into trap volume to trap you. As you can see, they did on the Dow. They sent people down, and everybody who went down went into trap volume. And if people had targets, maybe they were targeting the low of the previous day, maybe they were targeting 500 pips and stuff, because you know people have wild imaginations when they come to the charts. Okay, so if people had crazy targets here, maybe they took the execution down and they went all out. They closed their screens and they went out, hoping that when they come back, they'll find their targets hit. But they were led into trap volume. Okay, they were just led into trap volume and prices reversed, which means they lost. Okay, so this is something we want to be aware of. If you are targeting, say maybe 100, market condition will tell you how much to target, and we'll share that in a moment. Okay, if you are targeting, say maybe 200 pips here, as I did yesterday, I targeted 200 pips. That's why I'll show you the image. Okay, if you are targeting 200 and you know that 200 is somewhere down here, you must be aware that most of the days they will lead you into trap volume and they won't go beyond that. Oh, they will just come enough to stop hunt these guys. So you must know that what you're getting yourself involved in. Okay, you must know that sometimes or most of the time they're going to lead you into trap volume just to trap you and prices reverse, because people are so obsessed with chasing prices, and that's what they do. Hence I said do not trade the first candles. Okay, so when we look at this, guys, when we look at this, now the session has opened. Okay, we wait for the session to open. We didn't have any news yesterday, so we wait for the session to open and we don't take the first candle. Okay, so I'm gonna go back to my diagram. Okay, I'm gonna go back to my diagram. This one has been met. We know they've trapped people low, okay, below the closing price of the previous day, and now we waited for the session to open. There is no news, so we are ready to go. Now we are waiting for what? The third criteria. Remember, you cannot come to this one unless this one is met, and you cannot come to this one unless this one is met. So now we need what? A chart pattern. We are going to our charts. Okay, we need a chart pattern, and there are many chart patterns out there. If you go to Google, just search chart patterns, you will see a lot of chart patterns. But for me, I use mostly the triangles. I use the the rectangles, as I showed you the rectangles, guys. You see, I put a lot of charts on the playbook. Okay, and you already have it, so just master this pattern. I've tried to draw the most important patterns that you are gonna see repeatedly here. Okay, and I've explained everything about the rectangles. Okay, I've explained everything, I've shared everything with you, and I also gave you examples. Okay, so yes, this is in the playbook, which is in the description. Okay, so we have rectangles, we have triangles, but now I'm showing you rectangle because yesterday they gave what? A rectangle. The day before they gave a triangle. Okay, and I showed you that beautiful trade. So as prices are playing here, we want to see what? A chart pattern, because now all the other criteria have been met. We are not chasing the first candle, of which brings us to this point here. The first candle was a breakout candle. Why? Because if you try to bring prices here, you'll see one thing that is important from what I took. They actually gave us a rectangle. You see, sometimes I did say this countless times in my recent videos. Okay, and I know you heard me saying this countless times. Okay, this was the rectangle they gave yesterday. Okay, this was the rectangle they gave yesterday. Okay, and guys, this pattern started before the session. I'll come to this. Okay, but the most important thing I want you to understand here is the fact that they gave a breakout candle here. Okay, this is a breakout. Okay, why didn't I take it? Let's go back to our image. Okay, why didn't I execute here? It's because, what did we say? Let's go back. We wait for the session to open. And I always say, do not take the first candle when the session opens. Why? Because that is a candle which is built out of a lot of orders. That's when the session is opening. That's when multiple orders are being placed into the market. And besides, there are orders that have been placed which have not, because when we talk about indices, we are talking about a basket of stocks. And you know that stocks open during the US session, right? And when stocks open, obviously, there are many orders that have been placed by many people, okay, which are pending, waiting for the New York to open. That's why when the session opens, you're gonna see a crazily big candle. But remember this again, session open. Okay, session open. So let's go to our charts. This, you see, if you look at this candle, the time of this candle is 29. The session opens at 30. So obviously here it says 13:30. Why? Because this broker, you know, the server time's a broker. The broker is behind in 2 hours, and you know the server time, right? Yes, and you mostly can't change it unless you use some indicators. But I don't like such indicators. Okay, look at this. This is the candle that happened before the session. We don't jump. Okay. We don't jump for it, okay, because the session hasn't opened. And if you look here, this criteria has not been met. Therefore, we cannot come to this criteria and we cannot possibly get here. Why? Because this hasn't been met. So we wait for the session to open and we don't take the first candle. Important. We don't take the first candle, which is highly important, right? It's highly important. We don't take the first candle. So let's see what happened. They continued. Okay, now we're gonna go to our checkmark box. I love this. This is our checkmark box, guys. I do my analysis on MetaTrader 4 because most of my indicators are there. However, I execute on a on MT5. Okay, but my analysis are on MT4. I've been using this platform for so long, so I understand it better. Okay, so now we're gonna go to this book here, of which I said I'll send you this tick box. Okay, do we have a pattern? Yes. What do we have? We have a rectangle. Okay, rectangle. When the session opens, we have a rectangle. Okay, and is the pattern perfect? For the pattern to be perfect, it needs 3 touches down, 3 touches up. And I was paying more attention to Nasdaq at this time. Okay, because even Nasdaq gave the same thing. Okay, if you look at NAS, that's what the one I was paying close attention to. We had again a rectangle. Okay, we had again a rectangle. As you can see, we had a rectangle. Okay, we had a very beautiful rectangle. So if you look at this here, let me zoom now, because now I believe you will see a lot of things. Okay, we had a rectangle. Yes, they came and played here. However, with Nasdaq, one thing I didn't like, remember, is this pattern perfect? We are coming to answer that question. Okay, so we need to identify if the pattern is perfect. Of course, yes, we can say we have a touch up. Okay, because they went all the way up. We can say we had a touch up. Okay, we have a touch down, because this is not supposed to be a line, it's supposed to be an area. And once they go halfway from here, for me it's a touch. Okay, so we have this touch. Okay, and then we have a second touch up, and then we have a second touch down. Okay, and then we had a third touch up. Okay, and yes, of course they came halfway, but this is mostly halfway. They didn't come down. So for me, I told you I'm not married to a certain asset. I want the one that's giving me the best executions. So when I came here to this criteria here, is the pattern perfect? Remember, it must have 3 touches down minimum, 3 touches up. Okay, so for the NAS, for me, it wasn't perfect. Okay, however, when I came to S&P, because I want to show you why I took S&P. When I came to S&P, we had a touch. Let's see. Okay, sorry, we had a touch down, we had a touch up. Okay, we can't call this touchdown because it didn't go halfway. Okay, so we had another touchdown. Okay, we had another touchdown, and obviously we had a second touch up. So 1 2 1 2. We have 2 on either sides. Okay, and then we had from here, they came down, we had a third touchdown. Okay, and now we were waiting for another touch, and this is the third touch up. Okay, this is the third touch where up. So this one was perfect in terms of touches. Okay, it was perfect in terms of what touches. This one, sorry, the NAS, however, we had 1 down, 2 down, and the third one was pending. Okay, the third one was pending, yes, and then 1 up, 2 up, and then we had 3 up. So which one was perfect in terms of our criteria or our rules? Okay, which one was perfect? Obviously, Standard and Poor was more perfect. Okay, because we had a 3 touches. Okay, is the perfect? Is the pattern perfect? Yes, it had 3 touches up. So the answer is what? Is yes. Okay, time of the pattern. This is important. Remember, if you come here, I said something important. Minimum target is 50. However, market condition will tell you. Okay, which is highly important. So now let's go back. I told you guys repeatedly, if a pattern takes more than an hour to build, you can target 100. Okay, for the Dow, okay, I mean for the Nasdaq, it took more than 170 bars. These are 1 minute candles. If you say 170 bars, that actually means it took more than 170 minutes. So that is beyond 2 hours. Okay, that is beyond 2 hours. When we look at the S&P Standard and Poor, we had roughly more than that again, more than an hour. So if it's more than an hour, I told you, you can target 100. However, for me, I targeted 200. Why? Because the S&P is way too volatile as compared to the NAS. Way too volatile. Okay, so this one mostly goes double the size of the others. Okay, double the size of the others. That's why I targeted 200. But if it was this one, I was gonna target 100. Okay, if it was this one, I was gonna target 100. And I was looking at this one, and this one broke out perfectly. When this one broke out, I told you sometimes NAS and S&P will do the same thing most of the time because they're highly correlated. Okay, they're highly correlated. They're gonna do the same thing most of the time. So when this one broke out, actually, it wasn't that perfect for me. However, it was a good one. Okay, it happened at, oh God, I love this. Okay, let's go back because I don't want to pass steps. Okay, so what is the next step? I don't want to pass steps. I want you to follow the steps carefully. Okay, so how much time did it take? It took beyond 1 hour. When it takes beyond 1 hour, we know we can target 100 points or 100 pips, whatever you call it. Okay, so this one was 100, more than 1 hour, so the target is 100. However, I told you S&P is more volatile. It's usually double volatile than others. So if I'm targeting 100 on NAS, I will obviously target 2 on the Dow because of the volatility, as I've just explained. Okay, which is also highly important. So now we are gonna go to the next step. Do we have an evidence candle? Okay, I love this. Okay, yes, on the Dow we had a candle. This is the biggest candle. Okay, you see they went down, however they didn't touch. They went down and they came back. The last pull down, okay, from here all the way here, this was the biggest candle. They didn't touch though, but this was the biggest candle. So for me, I opted for S&P. Why? Because this was the biggest candle from the last touchdown. This is where they touched and they came back up. So you can see the candle stands out on its own. Okay, here I've answered why this breakout wasn't taken. If you fell for it, then you don't follow all the rules, okay? But look here, this was the biggest candle. So do we have an evidence candle? The answer is yes, okay? Now the most important thing is this one. This is the most important thing here. Most important thing, as I've just explained. We need to execute, all our criteria have been met. However, we have this pending thing here, correct time. And I put this watch over here for you, okay? We need an execution that happens as close as the clock or as close as the half-hour mark, okay? And we are going to take it, or willing to take it, if it happens from 50 to 10 past or from 20 to 22. However, we have the golden times, which if they happen at these times, wow, this is the best one. But not every day they're going to happen during the golden times, okay? So yesterday, let's see what time this actually happened at, okay? If we look at the time at which it happened, this one happened earlier, guys. Okay, this one here happened at 54. Okay, so this one happened early, and most likely they do the same thing. So correlations were on your favor again. We spoke about correlation recently, but again, just judging it without correlations, again, this happened at 54. It was only 1 minute to the golden times, but it is within our perfect timings. Okay, so this is the one I took. This is the one I took. Okay, this is the one I took on the close of the candle. Actually, this candle was too big. This candle was 40 pips. So I told you, when the candle is too big, wait for it. Usually they're gonna retest. So I waited for the next candle. It went up, and immediately when it crossed the closing of this candle, that's when I executed, which is also important to know. Okay, you can see my execution was on this candle, on the way back up. You see, it happened and it went down and came back all the way up, because this was beyond 50 pips. However, if it was beyond 40, however, if it was 25, I was just gonna take it immediately on the close of this candle. However, because this was beyond 40, beyond 25, which was 40, I waited for it to go down, because that's what they give. That's what they do most of the time, and they come back up. Okay, remember, there are people who enter before this candle closes. Okay, so they came for them to close them up, and again, sometimes this could have closed as a pin, so you have to wait for it to close. Okay, but I took it on this candle on its way up, okay, because this candle was too big. However, again, I didn't trail my stops, I just put my stops. Okay, but you must know that this is more volatile. The target is 250 pips, so your stops might be bigger than 25 on the S&P, which is why I don't take it most of the time. However, it's so good because it is more volatile and usually it goes beyond. Okay, so sorry, okay, sorry, yes, we need to go to the charts. Okay, sorry. So I took this one, okay, and the reason I took this one is because all the criteria was met, and again, this was a perfect pattern. So if we go back to our checkbox, what time does this happen? It happened at 54. So you see, 54 is within our accepted times, just 1 minute close to the golden time. Okay, it was 54, somewhere around here, which is perfect. Perfect. You take it, you put your stops, you put your take profit, close the charts, and go out. Okay, you don't have to be in front of your charts once you've taken it. No, take it, go out. You know why? Because most likely, if you don't leave the charts, you are gonna close it when it comes back. And mostly, I told you, this is important. Again, I want you to understand this. I told you that one thing that cost me most of my pain in this industry is actually trailing stops. They will go, and I'll see, oh, they are far, and I will move my stops from where they are to this point, because now this is break even. Most of the time they're gonna come because they know that's where your entries are. But because they've shifted the zone and everybody who went down is trapped and is losing, obviously they are not gonna close you, but they will come to your entry most of the time. Hence I say, punch in everything, get off the charts. Okay, I did everything. I went off, and I came back late, so it didn't take much time to hit my 200 points, because it was hit here, which was 49 minutes. That's not a lot. Okay, 49 minutes, 200 points out. That's very good. But even for people who took the Nasdaq, because yes, if you do a lot of back testing, you'll understand where they play, because sometimes I've already told you in my recent videos, they can give you a pattern within pattern, Shabaka's book. Okay, so even here they gave you a pattern within patterns, and they do this sometimes. Okay, instead of just breaking out and going, they start by playing and giving you another pattern. So they gave you patterns within patterns here. Okay, and this pattern here, the last one was rather perfect than the small one, but you must know that sometimes Richard Shabaka, I always tell you to read that book, he talks about patterns within patterns, and again they broke out of two patterns at the same time. However, here they gave you one pattern, but I opted for this one. But even this one, it went straight. If targeted your 100 pips, actually it went straight to your 100 pips without actually wasting much time. You see, it went again 40 something pips, it hit your take profit. Okay, it went beyond 150 to the high, and it actually ended up going to 100, but we don't want to stay long enough because they can come and close you. Okay, so you need to get in and get out, and you need to know how to target. So I told you, if the pattern is beyond 1 hour, you can target how many? 100 pips. So guys, I believe I shared a lot of things with you, and if you look at the Dow, the Dow didn't meet our criteria. It went up, it came down, and again it came to trap people. So this one rather came to trap people more. Okay, it came to trap people more before it just went boom, and then it started going. But again, I told you, look at them at the same time. Don't get married to an asset. Don't say, hey, I love the Dow. Yes, I love the Dow as well, I've told you that, but mostly it's not about what you love, it's about what has given you the opportunity on the day. As you can see, the previous day I showed you the one that I took. Okay, I took Nasdaq, but yesterday I took the S&P. So it's all about which one is perfect in terms of our rules. Okay, which one is perfect in terms of our rules. The Dow didn't give a perfect pattern here because it had roughly 2 below and 3 above, but yes, again it gave a triangle at the top, which was super perfect. But okay, I was already in like the breakout for me wasn't it was perfect, but this one wasn't really met by the time the Dow broke out, the Nasdaq broke out. But again, guys, even the correlations were there to confirm the move with you. It's just that for S&P, it is more volatile, as you can see, roughly 40 pips. Okay, but if you do this, take it after this, then you can put roughly your 25, or you can put 30, because this one is double volatile in terms as compared to this one. You just have to know how to adjust your lot sizes on the Dow, because the lot sizes are a little bit different from the Dow and the NAS. Okay, but once you know all these things, everything is well and you are good to go. So guys, I told you, if you haven't hit the subscription button, hit it. Okay, and you can request this on my email, unknown. Okay, unknowntrader24@gmail.com. Yes, you can request this and I will send it right to you. This one, I will send this one to you. And for those who have the playbook, please guys, master the patterns, master the trends, master everything, because I've summarized the entire strategy in this book for those who want to read. However, I still explain everything on the videos. Okay, so guys, you have all the things you need. And let me just state one last thing, which is important. Some days, people, these criteria are not fully met and you take it, you lose, you complain. Guys, also journal so that you know if you are wrong or if you are executing the right thing. Hence, in yesterday's video, I actually I named it one good trade. It's because you must take one good trade. Okay, it's not about your targets, it's not about how much you want to make, it's about one good trade every day, and that should be the main focus. Not to say I'm targeting this much, I'm targeting this month, in a month I want to reach this month. No, that's not important. The most important thing is take a good trade. And you must know that sometimes you will take it and lose it, because sometimes they can do this and go and break out on the other side, which is why I told you, if the rectangle is too big and it has taken a longer time to build, okay, usually they might break out to the side, give you an evidence candle, and you might lose, and they might actually be going to the opposite end. So sometimes you must just know this. Okay, but this strategy has a high win rate, a very high win rate, so it has catered for the days when they actually go against you, okay? Because there's no strategy that is 100%. I don't care what people say. There is no strategy that is 100% because you don't move the prices. You need to have the odds on your side. And when you lose, guys, you must be able to take the loss. So take the loss because it's part of the business, okay? It's part of the business. You need to risk. The reason you have stop losses is because you know you can be wrong, and if you are wrong, they're gonna hit your stops. So you don't want to lose too much. That's why we have tight stops, okay? So some days you're gonna be wrong. Take that loss and don't try to close the day green. If you lose, it's okay. Hence I tell you, execute, get off your screen. If you know you are easily tempted, get off your screen, come back the next day. Get off your screen, come back late in the evening when you know you have no any other opportunity. Don't be a slave to the charts, okay? Take your execution, close your charts, go out and enjoy your time, okay? And you're only trading during the US session, so you have all the freedom to yourself. This is about freedom. This is about time. You must be able to do other things. You must be able to do other things, okay? So it's important. Spend time with your family, pray, do whatever you want, okay? Don't be a slave to the charts, okay? So get off the screen. As I'm telling you yesterday, I took this one, I closed my screen. Because if you don't close your screen, you're gonna close it at break even. And you're gonna, when they start coming down, you're gonna close it. Oh, they're coming against me. And then after closing it, they're gonna go and hit your 200 pips. And you're gonna be like, oh no, I shouldn't have. Most of the time, if you look at your mistakes, you'll see that that's one of the common mistakes. If you took down the NAS, they went and you were going to be like, okay, they're coming down. You don't want to see these things, okay? For me, this is pain. I don't want to see it. I avoid seeing these things. I try by all means to avoid this, okay? Why? Because you are going to close it. And just when you close it, you think, oh, I closed it at, you targeted 100. Oh, I closed it at 50 pips. They go to your 100. Guys, when you win, make your wins bigger. Close your charts, get off the screen, go out, go have some fun, do whatever you want, watch a movie or do something else. Spend less time on the charts because less is more, okay? When you lose, don't try to revenge to close green. No. There's still tomorrow, fresh new day, new opportunities. Sober mind. Protect your capital and protect your mind, because most likely if you take a loss, you can blow your account. Believe me, I've done that too many times, okay? You can blow your account. Execute, get off your screen, okay? Execute, get off your screen. It's very, very important, okay? Execute, you have your take profit, you have your stops, you have everything in place. If you're wrong, the worst that can happen is they're gonna hit your stops, and if you're right, they're gonna hit your take profit. So guys, please, because I've seen a lot of people doing damage to themselves when prices are going down. Oh, all out. Look at this, guys, look at this. They did come down to my entry. If you look at it, they came to my entry. Firstly, if I trailed, I was going to be hit out. Secondly, if I saw this thing, this is pain, honestly. You'll feel like, oh, I have to close. And mostly when they come to your entry, they know this is going to inflict pain to you. So don't give them that satisfaction, okay? Close your charts, get off the screen, okay? This works for me, and I believe it's going to work for you. That's why I was able to get to 200 pips, okay? Get off your screen. Even if you come back the following day, your target will be hit already, okay? Or your stops will be hit. So don't be the one to close your charts, because the day when you are wrong and they're going to hit your take profits, they're going to take the entire take profit. Whereas when you are right, you take partial profits, okay? Please, guys, I appreciate you. Have a beautiful day. Today it's Wednesday, same opportunities, same criterias. Send me an email. I'll send you the box, okay? Thank you, guys. Appreciate you.